Alright, what is going on, everybody? Hope you guys are having the best fucking day of your entire life. Yo, in this video, I'm gonna break down how I made $13,396. Probably took me about a couple hours from day trading, but I'll break down my strategies, the systems that I used, the bell curve, how I position size into trades, what's Confluence, and how you can use Confluence to actually get an edge in the market. And then negative risk management. People talk about risk management. I talk about negative risk management. That means even if the trade goes against you, you do not lose any of your money. And then I'll break down my trades and also one indicator that I absolutely love, and I think every single person who's watching this video should have that indicator set up on your charts straight away. So without further ado, let's break it down, guys. Please take some notes. Again, if you're watching this video, you may as well be watching, what is it, Breaking Bad, but you're not watching Breaking Bad, but you're watching this video. That means you're hungry to level up, so make sure you take notes. If you're actually hungry to level up, man, make sure you take notes. All right, so let me break down the first important concept that I want to go over, which is called time frames. I'm sure I've on this channel I have broke down my time frames that I use for day trading. Oh my god, so many times. But hey, I'm sorry if you have watched this 1,000 times already. This is for the people who are just brand new to my channel. And all right, guys, so I do not use one single time frame for the whole day of trading. Like, I don't just go, oh, I just want to watch 5-minute charts and that's it, nothing else. No, I use 2-minute chart from 9:30 Eastern time to 10 Eastern time in the morning. That means first 30 minutes of the day I use 2-minute chart. Why? Because early in the morning, man, when the market opens, there's not enough candles. But when I watch 2-minute chart, it gives me enough candles to get a little context behind what's going on. And candles usually give you context, but there's a limit. All right. There's too less hurts, too much hurts as well. So when the candles are too like there's only 3 or 4 candles, that's not enough. When there's like 58 candles, that's not enough. Hey, that's too much. All right, they hurt. So I use only for 30 minutes. I use first 2-minute chart, and then I use 5-minute chart from 10 Eastern time to 11 Eastern time. Okay, for like 60 minutes. That's like plenty 5-minute candles. Beautiful, works beautiful for me. And then I use 10-minute chart from 11 Eastern time to about 3 Eastern time, 3 p.m. Eastern time, and how many hours is that? Whatever. Now I do not trade from 3 p.m. to 4 p.m. the last 1 hour of the market open. I don't trade. The reason why I don't trade is because that's where most of the manipulation's happening. That's where the big money is pretty much exchanging hands. I'm sure. I don't know if you guys have ever heard. There's an expression called that the dumb money opens the market and smart money closes the market. So what that means is dumb money is like people like you and me who are day traders, but we are sitting at home and trying to day trade. Smart money are people who are full professionals and they have unlimited resources. They have unlimited amount of resources like capital or news or connections. Like, those are the people smart money, which we will never have, right? So dumb money opens the market, smart money shuts the market. So that's why I want to trade early in the day, because I promise you, there are people who are wait, and this dumb money has categories too. People who are dumb, and people who are like still smart. And I want to take money from these people, like legally. If they make a mistake, I want to take their money. Period. All right. Why? Should I feel bad about it? No. Why? Because at one stage I was that person as well, and I paid for holidays to people who, rich people. My whole goal is taking the money away from them. It's legally allowed, because think about it. If you lose $1,000 in market, somebody else made you $1,000, because that's how the market works. It's a zero-sum game. Somebody has to lose the money for somebody to make money. And that means if I made 13K, that means somebody out there, or maybe 100 people out there, or maybe 5,000 people out there, or whatever, they lost some money, $30, $50, whatever, and all that accumulated into a bucket, and I just came and grabbed the bucket. That's a game. You see what I'm saying? All right, so these are the time frames. Sweet. Now next, let's break down my first trade of the day that I took on Meta. Now, as I said, I use different time frames for different times of the day, and let me break down the Meta trade, which is the 2-minute chart, because it was before 10 o'clock. Now, as soon as this is what was going on these charts. Like, look at this, everything. This is everything. All right, this is all the names that I was watching at that given stage. Nothing really was setting up, but I saw this meta break above. Yeah, meta was like just looking strong. I'll show you in a minute. Like, look at this. Look at the meta chart. Meta was just making nice move. It opened at around 550, made a move to 555, and now it's getting a little pullback around this 555, 555 level. And I'm like, okay, let's see. And there's a critical level that I have 554.45. I'm just like watching. I'm like, okay, whatever. Maybe a level break and then retest might be nice, but let's see. And then it started giving me a little pullback. Now I looked at the volume. I'm like, okay, the volume kind of makes sense. It's still trendy. The trend started in the pre-market from 448 nearly 548. It went up and then pulled back. And how does the trend basically works? If you know a little bit about the stock market, because you're watching this video, you should know how does the trend work. This is how the trend works. It makes a higher high every time. Right, that's how the trend works. And it makes a higher low. You see what I'm saying? The lows keep on getting higher from the previous one, highs keep on getting higher from the previous one. That's how the trend works. So when I looked at it, I'm like, okay, this looks like a solid trend. Okay, this 555 is a huge critical level, and this is a huge critical level that I have on my charts from the hourly chart. All right, on the hourly charts I got this level. Like, it's it might be looking nice, so we might take this trade if the price action gets above this, maybe this huge, not this huge, but little intraday level, you can say. Now this trade didn't work for me. The reason why I think it didn't work for me, I'll break down in a minute as well. I went long. My first profit target was this yellow line. Why? Because I'm like, okay, I'm taking a trade from a level to a level. That's my mindset right now. All right, because the stocks do not just move from in the middle of anywhere to in the middle of anywhere. They move from a level to level. But now there's another topic that I want to actually quickly go over. It's called thing called dynamite levels. I'll also talk about it a little bit later in the video. Dynamite levels are levels every $50 moves on a stock. So $50, $100, 150, 200, 250, 300, 350, whatever, up to 550. Now 550 was a dynamite level. There's another type of dynamite levels which are called dynamite level. Basically means they're big levels. And another type of dynamite levels are their dynamite zones. What I mean by that is 111 all the way to 111.11. That's a little 11-cent zone. Okay, all the numbers which are actually same, 111 to 111.11. It will be 222 to this 333 to 333.33. These are the zones. Okay, now this is a 22-cent zone, this is a 33-cent zone. But here, 555 to 555.55, that's a 55-cent zone. And I'm taking a play in the zone where the prices can actually reject. Do you see the mistake I made here? I know the dynamite levels, but I somehow was looking at the trade from a lens, or maybe it was the bias or whatever it was. I didn't pay attention to the dynamite zone. That means if the zone is sitting at the top and you're going long, and if it doesn't make sense, don't take the trade, because the prices can reject. And I've done enough back tests to know better. But I still made this mistake, and I'm just showing you like the real content. And I went long here. My stop loss, I'm like, okay, maybe I'll put a stop loss maybe somewhere around here, and it hit my stop loss. The trade didn't work. And then when I was journaling, I'm like, oh my god, man, I went long in the supply zone. I went long in I paid for people's holiday. There would be smart money who actually went long here 550. They are selling around this point, and I'm paying for their holiday. What the fuck, right? It is what it is. Sometimes you make mistakes. Sometimes you pay for other people's holidays too. You see what I'm saying? But anyway, this trade led me to the second point, which I want to break down, which is bell curve. So what is bell curve? Like, it's just as simple as it sounds. Bell curve is this thing that I use for my position sizing of the contract, or position sizing on the day. Okay. Now bell curve means every single day, this is how I start my day. This is my position sizing. So you can say this side is position size, this side is time or trades or whatever. Early in the morning, the first trade of the day usually is this small position size because it's very early in the day. Okay. Um, right, the first trade because I don't know psychologically or whatever, man. If I take my first trade of the day green, I'm green on the day. If I take my first trade of the day red, I'm red on the day. It's psychological or whatever it is, right? So my first trade of the day is always small position size. Why? Just in case if the trade doesn't work, I do not lose big money. So it's easier for me to recover from the loss, like what happened today. I lost money, but my position size was just because it's earlier first trade of the day with small position size just because just in case if I'll even this trade goes against me, I'm not down big. If I'm down big, man, I'm walking away. I'm gonna walk away red for the day because now I'm just trying to recover from the loss and I will keep making mistakes over and over again. So in my brain, I'm not even looking for things like, oh, I want to make money on the first trade. No, first trade is only to like I got a pool in my house, right? Before I jump into my pool, what do? I literally dip my little toe in the water just to get a feel of it. All right, it's a heated pool and everything sweet, but I dip my toe. I'm like, oh yeah, it's a bit cold. Nah, fuck it. I'm not going in. Why? It just a thing that we do now after millions of years of evolution. We grew into thinking like, let me just check this, let me just test this before jumping in. That's the same mindset that I have before doing this. Anyway, when I'm red on the day, now first trade is red. What do you do next? Do you put a position size up on the second trade? No, that's what broke people do. Remember what I mean by that? What do people who do not make money do? They lose on the first trade and then they do second trade, they do big position size. This is what they do. They do big position size just because they want to make some money and also they want to recover from the early morning loss. But we don't do that, bro. You know why? Because if you want to make money, you got to do things opposite from everybody else who's losing money. Think about it. All right, that's the whole point of me making these type of videos. My point is so I can help you make money with my free content. So if you start making money with your free content, you're like, man, I want to learn more. And then you come and join me inside in my mentorship where I teach you all the strategies and everything and we level you up. Like my whole point of making these videos is only 1% of people can actually use this. They're going to make money and then they're going to come in my program and they're going to join. And I'll just keep it real. All right, it's a win-win for you. If my free content is making you money, why not? This is like you testing the waters. You see what I'm saying? This is you testing the waters, going light early in the day. You don't want to just buy my program up until you know that this will help. So why I'm trying to where I'm going with this conversation? What do normal people who do not make money? They don't do any due diligence, nothing. They just jump into a trade, next trade a little bit bigger. Why? Because they want to recover from their previous loss and they want to make some money. But what do? We go either same position size or we drop the position size a little bit up until we take the first green trade of the day. The moment it's a green trade, next trade a little bit more. Okay, does that make sense? First position size, let's say if it's $1,000, next one I'll take 600 or 800 or whatever, but sometimes even 1,000, but never more than what my first position size dollar wise, like actual dollar wise, was. Why? Because I'm waiting for the green trade. The moment I hit a green trade, I'm in a different mindset. I'm in a different mindset straight away. So that's what I'm doing. This is called bell curve theory. And if the second trade worked, sweet. If the second trade didn't work, same position size. Make sense? If second trade worked, big position size gets to a point where you're super tired on the day, man. You're like, man, I made enough money on the day. You know what? I don't want to lose the money that I already made. Let me just start cutting my position size down so I can walk away. All right. So now I lost a little bit of money on this. Then I started watching Tesla. I was watching Tesla and the Tesla trade. I didn't take this trade for like so long. Let me actually show you when I actually started watching this. Okay, roughly around here when I started seeing a little pullback, I clearly now think about it, yo. The first trade of the day I took around 9:45, 9:46, whatever. The second trade I took was half an hour later, like more than half an hour later. People do not have patience that long to even wait after a first losing trade. They lose on a trade and they jump into it. They're hunting for a play. Where can I jump in? They're hunting for a play, and that's why people do not make money. You can't hunt in the stock market like, let me hunt for a play. No, you still wait for the trade to come to you. This is called real fucking trading. You don't go out there in the fucking market and be like, man, give me a trade. No, market will give you a trade, but do you have the freaking patience to actually sit down and wait for your trade? If not, you ain't gonna make money. Period. Right? So 35 minutes later, I saw this Tesla trade setting up. Tesla made a decent move. Tesla was pushing above this pre-market high. It was looking clean. I was like, okay, let's see if it gives us a pullback. Tesla gave me a finally pullback, so I drew my Fibonacci. And what's the Fibonacci? You use Fibonacci's to find out two areas on your charts. Okay, you use Fibonacci's to find out two areas on a chart. You draw it from the low of the day, literally of the day, not in the pre-market. Low of the day to the highest point. So you get two levels on your charts. One is this 0.236 and one is 0.382. You get these two levels, and these are my settings. Please screenshot this. All right. Originally, your this whole thing will look like a fucking rainbow. Okay, you don't want the rainbows. You just want clean cut, simple. These are my settings. Just take a screenshot of this. Okay, and I like to pay attention to, for in my particular brain, bro. If the stock is holding this 0.236, its strongest trend. I want to trade the strongest freaking trend because I want to make money with options. Options pay you when the trend makes a big move. Second is when we go down and touch the 0.382. It's still strong and it can still make a decent move. But the moment it touches 0.5, and then some motherfuckers out there be like, oh, but 0.61 is the golden ratio. Yeah, bro. If most people think 0.61 is a golden ratio, just understand most people are broke. Period. All right. So you can't, if most people are like, oh, that stuff, I tried that strategy, doesn't work. Most people are broke. You see what I'm saying? Most people, bro, you're going to do things. If everybody's trying this one thing, no, you try something else. That's how the game works. And that's why I actually love it so much that my YouTube videos, even though I give so much value, it doesn't have a lot of views. I'm like, okay, sweet. It's only a bunch of very small amount of people who are super hungry, who do not care about sexy graphics, who do not care about sexy edits. They're watching those type of videos. It's you guys who are watching these type of videos, and it's you guys who make money. You know, if you go out there and you find a fancy edit videos and that video has 1 million views, I promise you, do you think that 1 million people make money? No. You see what I'm saying? It's just funny. It's crazy. Anyway, the moment it touches 0.5, it's too weak. Bro, I promise you, it can still move up, but it's slow, so slow. Bro, my grandmother, she's 90 plus. She can walk faster than this stock will go up. It's no point. Is it? Then 0.618, nah, I can't do it. Can't do it. So I'm only watching these two levels. Now, it never gonna just be like accurate, perfect, where it gonna has to touch this. No. If it's even holding somewhere here, it's sweet. It just shouldn't touch 0.5. Up until it touches 0.5, it's cool. The moment it touched 0.5, sometimes it can be even off by 1 cent. That means it hasn't touched 0.5. It's still cool. Okay, this is what I do. All right, now, sorry, I'll draw this again. Okay, now I'm waiting for Tesla. Tesla pulled back a little bit more. Now what I'm seeing here is Tesla has 8 exponential moving average. This is 8, by the way, this is 8 exponential moving average. If you want to do the settings of this 8 exponential moving average, these are my settings of 8 exponential moving average. You just go to your indicators right here, type EMA, click this EMA. The moment you click this blue line will be on your charts. Then you go and you change the settings to 8. Don't touch anything else. Style, change the style if you want. Visibility, change the visibility if you want. Now, because I do not want this, so I'm gonna delete this from my charts. All right, sweet. All right, this is how you set up EMAs, and now I was like watching this. I'm like 8 exponential moving average bounce. We are also holding this 0.236 level. That means the trend is strongest. Also, there's a hourly level sitting right here, and it's trying to break above the hourly level. if it's able to move above this hourly level on the next candle, because this candle closed right here, if it's able to break above this hourly level, I'll go long, and I'm gonna keep taking profits as it's hitting the next yellow lines or whatever. But because I was coming from a losing trade, the meta trade was a losing trade. Now I'm like, okay, whatever it is, man, I'm doing small position size. I just want a green trade, so my next trade can be decent position size. You see what I'm saying? And now, boom, I'm in the trade. And again, you might be like, yeah, I'm just talking shit, but bro, no, I'm not. All right, this is. Let me show you. Okay. Tesla above 341 for 350 calls. All right, yeah. Tesla above this 341 from 5 for 350 calls. Actually took this trade, and this is the first profit target. The moment it touched this, and this was, by the way, this was a 35% trade. It was a beautiful trade. But this was a trade, the Tesla trade, beautiful executions, perfect executions. How you can copy them, these executions, is draw your Fibonacci points, see if the stock is making a nice move. Don't draw in chop. Please don't be that person who's trying to draw Fibonacci in this fucking chop. All right, the stock has to be a little bit trendy. It's a trendy move. Draw the Fibonacci, look for the Fibonacci and other areas of confluence. Confluence means when there's more than one critical level sitting on the same price point. I'll break it down as we move forward in the video. All right, look for multiple reasons to jump in, and then you find multiple reasons, you jump in, you take the trade, and you keep taking profits at the next hourly levels. And you're like, man, how do I draw hourly levels? That's the stuff that I teach you inside my program. So yeah, check the first link in the description box below. All right. All right, that's my shameless way of just saying, come on, join this. We can change your life, because we're changing hundreds of people's lives right now. All right, I got you. All right, this is Tesla trade, beautiful trade. And now let me break down the trade that I took on QQQs. Now, QQQs, the reason why I took this trade, this is chop. How do I know it's chop? Because it's stuck between the first 15 minutes of the market open. First 15 minutes of the market open is called ORB. That means opening range breakout. The first 15 minutes, the highs, literally first count the first three candles, 1, 2, 3. Find the highs of the first three candles and the lows of within first three candles, 5-minute chart, or first 15-minute one candle. Highs and lows, mark it on your charts. The moment you have marked it on your charts, there will be the strong levels. If the stock prices is holding between the ORB, it's choppy. The moment it breaks out, that means it has some juice behind it. That makes sense? Now, as I broke down before, a thing called, I broke down dynamite levels, maybe on the other screen. Dynamite levels, 500 is a dynamite level, right? And also, I broke down a little bit Confluence. So let me just quickly go over Confluences for you. So what's Confluence? Confluence, in simple words, means when there is more than one reason for you to jump into a trade, that's called confluence. For example, if the stock price is going up, all right, and then it starts pulling back a little bit, and this is your 8 exponential moving average, 8 EMA, this is your Fibonacci level, Fib level. This point or this area where these things are sitting, now there's multiple reasons why you can jump into this trade. One is 8 exponential moving average, second one is Fib levels, third one can be hourly level going through. But think about it. People who trade hourly level breaks and bounces, they are jumping in, right? They are getting in. People who trade 8 exponential moving average bounces, they are jumping in. People who trade Fibonacci's, they are jumping in. When all these people are jumping in, the prices, the demand increases, and hence it makes a big move. And that's why you want to always look for high areas of confluence where most of the people can jump in. All right. Now the confluence here, what I was watching was 200 simple moving average, right, sitting right here. Okay, this is 200 SMA. Now, how to set up on your charts, bro? Literally go on your indicators, type moving average. Okay, it will say moving average simple right here, and click on that. This blue line will pop up, and then you change the settings to 200. Don't change anything else. Just change it to 200. Keep everything same. You see this? Pretty much same. It's But because I don't want it, I already have it. So I'm gonna add. I'm gonna delete this. Um, okay. Now that's 200 moving average. It broke above the 200 moving average. Is retesting. Okay, that's first area of confluence. What's the first area of confluence for me right now? 200 MA break and bounce. What's the second area of confluence that I'm looking at? 500 dynamite level. That means we're trying to break the 500 dynamite level. If it breaks the 500, man, because we already tried twice, if it breaks, we're going to make a nice move. So 500 dynamite level. What else? A critical level in the pre-market. We were rejecting of this critical level a few times in the pre-market. Pre-market level. What else? Can you think of anything else? Can you see anything else? Oh, can we draw Fibonacci? Because lately the trend is trendy. Yeah, I don't know. Maybe we can. Go from low of the day to highs. Boom. Fib level. Sexy. Fib level. Now there's such a strong freaking area of confluence. That means this area is giving us 4 reasons to jump into a trade. That means people who trade this are jumping in, people who trade this are jumping in, people who trade this are jumping in. There's so many reasons for us to jump into a trade. So I was watching this, I'm like, man, this looks nice. You know what? Let me just jump into this trade. I jumped in the trade the moment it broke above 500. Now, there's a thing called negative risk management. Okay, this is confluence, sweet. Now, it's so important to actually understand negative risk management, and I've broken down so many freaking times, man. I just want to really quickly go with this. I don't want to spend too much time. Please watch my other YouTube videos if you want. Negative risk management simply means, okay, if you are jumping into it, I will use these lines as actually, let me just hang on. Okay, sweet. Negative risk management simply means if you are jumping into a trade right here, okay, this is where you're jumping into a trade. This is your next levels, these lines, okay. If you are jumping in, let's say, for example, we say 20 contracts, okay. If these 20 contracts costed you $100 each, that means $2,000 is what you paid for them, okay, as contract. The moment price gets above and touches your first level, you're gonna take 50% off. You're gonna take 50% your contracts off. Now, you're gonna take 10 contracts off, and by the time it touches this level, these contracts might be 140. That means $40 a contract you made. Yeah, you entered 100. Now it's 140. That means $40 a contract you made $400 in profit already. So this $400 is in your pocket right now. It's in your pocket, sitting in your pocket, done. Yeah. But there's 2 ways you're jumping out because it's a critical level. Now, any critical level that you have on your charts, there's 2 ways how we can go. One is we can reject. Second is we break above. Everybody knew that, right? There's only 2 ways how the critical levels can go. One, we reject it. Second, we break above it. So now, if we reject from it, what happens? The 10 contracts that you're still holding, your stop loss is break even on the option contracts. So you're still holding 10 contracts, yeah, because you jumped out 50. The stop loss of the remainder of the 10 contracts that you have is break even of the option contracts. So just in case if it goes down and hits your stop loss, hits your break even. So let's say if it starts going down right here and it hits your break even on the option contracts, you still have this $400 in your pocket. You haven't lost money as such on the trade, right? Does it make sense? You still have this $400 in your pocket. That means minimum you'll walk away with 400. But let's say if it went a little bit like this and then hits the next level right here. So now you're holding 10 contracts. Now you're going to take 5 off. Now these 5 might be sitting at 180, let's say, or 180, yeah, maybe more, whatever. That means $80 a contract. 180, that means you entered at 180, that means 180, $80. That means another 400 is in your pocket. Now 400 plus 400, you have pocketed $800. People jump out fully here. And you know what people tell themselves? Oh, nobody goes broke taking profits. But nobody gets rich taking small fucking profits. That's not how you make money. If you want to make money, you're going to let your runners run. That makes sense? So now think about it. You took another 50% off. That means you took 5 contracts off. You're still holding 5. There's 2 ways how this can go. One is if it rejects, your stop loss is break even. But if it keeps going, you're going to take another 50% off. And now you're holding 5 contracts. How do you take 50% off? You can't take 2.5 contracts off. That means you always go a little higher. That means you can't take 2.5. That means let me take 3 off. 3 off, and this is maybe because it might be deep in the money now or whatever. These contracts might be at 250 now. So now you've picked $450 again. Now you're up 1250 on the trade already, and you still have 2 contracts. If it goes up again, you take 1 more off. Then if it starts pulling back, you hit your break even, you jump out. Does it make sense? Now maybe you made about $1,500 on this trade because you stayed in and you used negative risk management. You kept letting your runners run. But people do, they jump out here fully and they make, say, $500, and they tell themselves, nobody goes broke taking profits. I'm so happy I can make 500 with this. Bro, you could have made 5,000 with this, you dickhead. What about that? Oh, no, I don't care. No, that's not how the market works. My whole goal is to spot the trendiest and the sexiest name so I can keep my runners running. All right? And that's exactly what I did on this QQQs. Every yellow line, I kept taking profits. I jumped in, as I said. Now, moment it hit 11 o'clock, I'm jumping on a 10-minute chart. Remember, I broke down this earlier in the video. I'm on a 10-minute chart now. It hit the yellow line. Guess what? Hit the yellow line, I took 50% off. The next yellow line, never hit the break even. Next yellow line, what am I doing? Look at this. I took another 50% off. Then I took another 50% off. Bro, got to a stage where I'm left with like such a little position size. And this was maybe, I think, if I'm not wrong. Hang on, let me check. Give me a minute. Yeah. Okay. This was 275%, 280% low, 310%. I'm so back. You see what I'm saying? This is called holding your trade to the best of your ability. All right. And now the hard part here is when the stock is pulling back, if you have peaked at your unrealized gains were probably sitting at, say, 5,000 here. You might be like, oh my God, man, this is so nice. But when they pull it back, it's only sitting at 500. That's where you stop looking at unrealized gains. I don't watch my unrealized gains when the market is open. I don't watch the dollar figure. No, that's not me. The moment you start watching dollar figure, man, actual what's dollars in money in dollars, you're gonna stop feeling the sense of, the sense of the market. It blocks the sense of the market because now you're only trading P&L. It's not the best way to go about it. You see what I'm saying? But yeah, man, this is the trades and this is the stuff that I did. And now you might be like, what's your position size to make 13,000? Bro, it's a 300% trade. That means, think about it. If my position size was $5,000, 300%, that's 15 grand. So you do the math. But yeah, it was nice. By the way, guys, you know what? If you want to watch more videos like this, there will be a playlist here. And if you want to learn from me, there will be a link right here. Click 30 seconds and I got you. And subscribe to the channel. Comment under the video, subscribe to the channel. Comment if you watched the whole video so I know that you guys are interested. And that's it. I'm out of here. Subscribe to the channel and like the video. All right, peace. Goodbye. See you later.